Hey, fellow listeners, audience, viewers, followers. My name is Jada Thompson. I am a thought leader in the accounting industry, a practicing accountant, and a practicing tax preparer. Today, I'm here to talk to you about a little bit more of a continuation of my series. In today's session, we're going to talk about the most common tax forms and filing requirements for self-employed individuals. So our last session, we talked more about more tax strategies based off of tax scenarios. This session, we're going to talk about the forms associated to those self-employed individuals. And with saying that, we're going to go into also partnerships, corporations, and other specialized forms. Now, understanding which forms you need to file and when you need to file it is so super important to staying compliant and to avoid any costly mistakes. So let's go ahead and get started. Are you guys ready? Follow me on this journey. So for self-employed individuals, you file what's called a Schedule C. That Schedule C is for, let's say you're a freelancer gig worker or you render professional services such as like a mobile car wash, auto mechanic, anything of that nature. You will add to your 1040 what's called a Schedule C. In that Schedule C, you do the computation or annotate all of your expenses based off of what how you operate. So you're going to use that Schedule C to report income or loss, one or the other. It doesn't matter. The beautiful part of it is if you're using automation or software, that software is, or you have your tax preparer will have software that would automatically calculate this easily, seamlessly, and efficiently for you. But what you will have to provide to them is the numbers, those receipts. That due diligence piece is still a essential part of compiling this information. So with continuing to that, we're gonna say, okay, I am a freelancer. I'm using a Schedule C, and I want to operate as a sole proprietor or a single member LLC. Remember those two because we're gonna come right back to it. So on a schedule C, right, you're going to report the income you've earned from all of your business activities. Remember, I'm a freelancer, right? I remember I'm a mobile car wash individual, or I'm a DJ, a disc jockey, right? So what we're going to do is we're going to also not only mention our income that we receive, the income can come through Cash App, through Zelle, not recommended, but can be done. You can have point of sale systems. You can have merchant services or merchant processing systems such as Square. You have a multitude of them out there now that are replicating the ultimate concept of merchant processing. And then you're going to capture your business related expenses, right? So when you're capturing business related expenses, you're capturing office supplies, you're capturing business travel, your home office deductions, and so forth. Now, at the end of the form of that Schedule C that, remember, accompanies your 1040, you're going to have what calculates your net profit or loss. Now, remember these terms: net profit or loss is transferred over to the main form, which captures you, the individual. When it captures you, the individual, it's on your 1040, right? So if I suffered a loss from my business and I know it was a outstanding year, but the operational overhead cost made me lose $5,000. Well, if you have wages earned by a W-2 job that's helping you sustain, right? Your wages is now going to decrease by that 5,000 that you lost. So it's favorable to you, but at your adjusted gross income level. And if you follow my series, you're going to get more and more knowledge on that piece of how you'll be able to see, okay, if I had a profit of 5,000 or a loss of 5,000, how is that going to impact my 1040? Okay. And remember, the 1040 is where information from all these additional forms that we're going to talk about today are transferred over and captured in a one document tax return with supplemental schedules that break down different aspects of your life. Maybe rental property, maybe a self-employed sole proprietor, and so forth. So we've covered the freelance workers. So now we're going to talk about some of the common expenses: advertising, supplies, meals, utilities. One thing I want you to remember: as self-employed, you're responsible for paying both the employee and the employer portions of Social Security, and Medicare taxes. This is also known as self-employment tax for us business owners. So I have Jane. She's an awesome receptionist. She's on W-2. Because she's my W-2 employee, I withhold taxes from her on every pay cycle in a frequency that has to be reported to the IRS quarterly. Those deductions that I'm withholding and those payments quarterly have to be released to the reporting agency, the IRS. But not only that, I'm also withholding what's called employer responsible taxes. So remember, you're taking out employee taxes from her pay stub to assure that she's applying her due diligence. But then on the employer side, you still have to withhold Medicare, Social Security, and your portion of their taxes. So what happens is, once we're doing that, we're taking care of our employees. But what we have to do, if we, the owners, are not on payroll, we, the owners, when we file our tax returns under a Schedule C, then we are required to do what's called self-employment tax within our 1040 tax return calculation. Okay. Now, that 1040 tax return calculation is very, very unique because it only calculates based off of exactly what is captured in your respective form. Now let's move on to partnerships. Partnerships and multi-member LLCs file an informational return called a 1065. Now this form is similar to the Schedule C, but it's a separate form, standalone from your 1040. It is a business tax return that is a tax packet, informational return that is calculating the same things as the Schedule C: the income, your expenses, and it also allows you to capture key details of who are the key stakeholders involved in this entity. Meaning, do we have a single member, or do we have a partnership, or do we have three people that have a vested interest by a percentage involved in the ownership of this, or operational liability of the ownership of this entity? With that being said, we're going to go ahead and go right into our next form, right? So if you're a partner in an LLC, I want to make sure that you understand you share a percentage of the business income, deductions, credits, and it also gets included in your overall tax calculation, carried over in a report called a Schedule K1 issued to each partner owning a vested interest in that partnership. You take that K1, and that percentage drives what's going to be reported on the K1. But not only that, that K1 has to be reported and transferred into your individual tax return. It's vital that that is very clear and transparent, and that you filed your business taxes on time so that you can distribute these specific documents, which is called K1s, to your invested owners and stakeholders. Now we're going to go into an 1120. The 1120 form has two forms of nature. One is for 1120S, and then that one's called for the S corp. I'm a sole proprietorship. I'm a S corp, sole proprietor, limited, one business, one single business owner, versus I'm an 1120 C corp, which I carry as that tax status for multiple reasons. An 1120 form reports the same exact thing as the Schedule C. These company income and expenses and the profits all pay taxes on its profits. So a corporation that file an 1120C, 1120 form, correction, do pay taxes on its own profits. Now, any dividends, however, which is completely different. Now, remember, before, the K1 in the 1065 carries over your percentage by your vested ownership. 1120, however, goes and takes the dividends to the paid to the shareholder and are taxed again on their personal returns. So, is it a strategy? It all varies. It varies on your bottom line. Are you a lucrative and profitable company? And do you have enough wages on your personal side that will offset some sort of the unpaid tax liability that's going to be brought over by the dividends and the operational taxes to for your percentage of your entity. S corp has specific eligibility requirements. Those requirements include, but are not limited to, the number of shareholders, the types of shareholders, and you do benefit by avoiding double taxation, especially if you do a C corp. So, with that being said, we're going to move on to our final section of today's session, right? So today we've covered Schedule C, we've covered a 1065, we've covered an 1120, we've covered an 1120S. So now what we're going to do is we're going to cover a little bit of some other forms that are involved. There are other tax forms depending on your tax situation that are like supplemental or addendums, if you'll say. For example, the Schedule F is used for farmers. So if you're a farmer and you have income to report as well as reporting activities on expenses, that's the form that you're going to use and then roll over to transfer to your 1040. If you own rental property, then you're going to use what's called a Schedule E to report those same exact data that you're reporting in a Schedule C, a 1065, an 1120, or a Schedule F. Now, for those claiming earned income tax credit, and that is very, very likely for those who have dependents, qualifying the dependents, and pass the relationship test. To claim these dependents, you'll file what's called a 8862. That 8862 is used to identify whether you're allowed or disallowed from previous year, and it allows you to identify who the individuals and that they pass that relationship test. The other and another unusual but typically becoming very popular is the 8889. That is for the HSA form. So a lot of people are now being able to be very strategic in medical costs, right? Because the generations after generations, we do have times when we face medical challenges, and those medical challenges are becoming costly. Well, with costly medical expenses, you have the opportunity to not only have medical coverage, but you can have medical coverage in the form of a HSA, a health savings account. That health savings account requires a Form 8889 and has its own information that it's required to be inputted. So now, as you can see, in this world of taxation, there's a multitude of forms, right? But what's essential to understand is the requirements based on your business structure or even your personal situation. If you're self-employed, if you have a partnership, if you're a farmer, if you have dependents, if you have an HSA, if you have a premium tax credit through affordable health coverage. All of these call for or prompt for different forms. And in order to have these forms, which sometimes it's so much information that it makes it extremely complicated, go to a savvy, knowledgeable tax professional. Utilize your resources. Be resourceful. Utilize the internet for reference. Validate those individuals or subject matter experts that you're lending to or leaning on, to make sure that that information, not only that they seem like they're speaking a good, is coming across correctly, but validate what they're saying. So that way you eliminate the potential of being in a place where you are subjected to scrutiny through the IRS or raising a red flags. Now, thanks for watching this. We hope you had a very informational session today. Do look forward to the forthcoming sessions. We're going to dive into more specific role industry tax returns in great detail, page by page, scenario by scenario, and stay informed, stay compliant, and most importantly, hit that subscribe button on my channel on this call. And also, if you have any questions, feel free to comment or message me back on YouTube. I'll be glad to respond to you. And lastly, you can visit my website. There's a lot of free tools and resources available. My website is justaskYara.com. Thank you.